right, everyone. Welcome to episode 8, I believe, of the overnight sessions. We're just going to get right into it. You guys already know I am a walking advertisement, walking shameless advertisement for Nike. I'm trying my absolute best to pump that stock. Don't worry, guys. It has not been successful so far, but I'm still trying, and I ain't giving up. But today we got a lot to go over today. I said today twice, but this is a new setup for me. I'm constantly trying to experiment. It's still pretty ugly, my setup. I'm not the most creative person in the world, but I'm just trying different things until something clicks. But we have a bunch of earnings to go over and earnings for next month. And then we got my portfolio to kind of glance over. And then we got a funny post, some interesting posts on X. And then we have a reaction to a YouTuber that I think a lot of you guys might know because he is one of the most popular financial YouTubers. Now, I usually try to find YouTubers of like different industries and different space to react to just because, finance is something that like I'm already covering, you know what I mean? So it's kind of redundant. And it's better to have, in my opinion, it's better to have like a different perspective rather than everybody you watch, is only looking at it from a financial point of view. But anyways, we got that to go over. So a lot to go over. But the two earnings that were on my list, or actually three, that have already reported, seems like only one of them actually did good. So Netflix obviously did not do very good at the earnings reaction. I still think 120 is possible for Nike, or not Nike, Netflix. Obviously, it did not do that at earnings. There was a lot of consolidation here, a lot of false signals on the daily. So I thought it was time for it to start turning back up, but unfortunately, that was not the case. So it did drop and then kind of come up a little bit. But Netflix, I almost said Nike again, but Netflix just cannot seem to catch a break. It got really oversold here for a second, and then it just had a bounce, probably just because it was so oversold. It just had to come up just to squeeze out people that were short closing their positions, and then people buying the dip, of course. But yeah, so unfortunately, Netflix was a loser for me in the short term. I did start a small position. For you guys that didn't know, didn't watch my last videos, I do have a small position in Netflix now on my actual portfolio. Now it is down, but it's still very small, so I didn't really lose a lot of money. Over the long term, when it comes to Netflix and Disney, I actually think Disney is the quote-unquote safer buy because with Netflix, it completely depends on how their situation with Warner comes about and what they actually do with Warner, right? How that purchase ends up performing for them and what they do with it, right? If they just completely destroy the brand of Warner and they just keep pumping out just trash content, right? Slapping an HBO sticker on it or a Batman sticker on it or whatever, yeah, it'll pump up the numbers in the short term. People are going to watch it just because it's Batman, but over the long term, it has to be good content. So it completely depends on what their performance is like over the long term when it comes to HBO and Warner. But it also has a pretty good payoff if they actually do perform, right? And Netflix, say what you want about them, but they definitely have been performing over the last like 10 years or so. Ever since, it's basically the past 10 years. Obviously, COVID was a big drop for them, but they came right back up. So now when it comes to trading, though, I know I was starting this, but to be honest, I might just stop with the short term. I'm not completely sure yet because I don't want this to be like this to turn into people copying like short-term trades and then people getting mad at me. Well, I guess I shouldn't really care of what people think, but basically when it comes to short-term trading, like most of them are going to be losers, but like the big winners are going to pay for all the losers, you know what I mean? So like constantly recording or like putting out all my trades like I have been, you know, most of them are going to be bad. Most of them are going to look like bad trades in the short term. So I don't know if I should just go ahead. Actually, yeah, I'll just keep doing that. I don't know what the hell I was thinking. But basically, in the short term, it always looks like a bad trade. That's what my point is. But over the long term, it usually pays off. You know, as you guys can see with Robinhood, which is my #1 position. But it was just something that I was debating on as well when it comes to like the format of my videos. Like, should I actually like get into like short-term trades or whatever, or just focus on long term? But I mean, why not both? But the one trade that I did not take that I should have is KMI. Obviously, on earnings, it did very well. It's been consolidating for a long time, and then it finally had that pop on earnings. I mean, if you bought right before earnings, you would have gotten an 8% pump along with a 4% dividend. So that was very nice return. And you would have been in the green before ex-dividend date. So you would have had a nice trade along with a dividend payment. You know, if you still had a little bit of shares left, right, or all of your shares left, you would have a dividend coming along with this 8% pump. So definitely I should have taken this trade. And now it's just coming back to retest that old high, I guess. But it is what it is. And then we have COF. Thank God I did not make this trade. Yeah, it just collapsed on earnings. There is this gap right here, so it could come back up to 250, but it looks like in the short term it wants to come back down into this zone, this buy zone of 200. So it looks like credit card companies are not doing so hot, which does not look good for American Express. But American Express is a different company from COF, so we'll just have to see on the 30th for American Express. And the most so the next one after Monday, Tuesday, we're gonna have Invesco. And honestly, I don't really have a side for Invesco. It could go up, could go down. I used to have a position in it in my main Robinhood portfolio, but unfortunately I just completely sold out because it was going sideways for a very long time, and I basically just got tired of it. I thought it was opportunity cost, and then wham, you know, which is one of the reasons why I've been hesitant to sell PayPal, because I mean, the chart for PayPal looks similar to this, right? And you know, it's had that big drawdown. It had a little bit of a pump, but mostly PayPal's been sideways, and I just don't want it to be Invesco all over again. You know, I did have Invesco a little bit in the 13s, the 12s, the 14, 15. You know, I was buying a little bit here and there, so I was starting to build up a position in Invesco, and then I just completely sold way too early. I think I sold some at 18, 19, so close to that short-term top, and then obviously I felt like a winner when I missed out on this drop. But you know, at the end of the day, who was the big winner? People that were buying, consolidating right here, accumulating during this consolidation, and then waiting for that pump. So, and they collected a nice dividend. Right now it's a 3% yield, but back then it was a 5% yield. So, you know, who's laughing now? I guess not me, because I missed out, which is why I always sound grumpy. But yeah, I don't really know what's going to happen on earnings. I just keep it on the list because I like to follow it. But we also have VFC Vans. Now, the chart for VFC on the daily is probably one of the most good-looking charts I've seen just recently, right? If we just look at the daily, right? This is the daily chart. We have this big waterfall here. Obviously, that was painful. But then we have some consolidation, accumulation here. And then we have this little spike to right, kind of get rid of those early sellers, right? People that were buying here, they probably sold for that quick, easy win, right? But then it came right back down. It was also a bull trap, but then it consolidated a little bit more and it broke out, made another consolidating box right here. So box right here, box right here, and then moving averages converge, get tight right here. And man, if you would have bought like right here, that would have been perfect. All the moving averages are consolidated right here. You have a buy zone, a big buyer, right? This is the smart money buyer. And then big move. What would that be? Yeah, you'd be pushing 40% because they also pay a dividend. So you'd be pushing 40% returns. And now it looks like it's making another box of consolidation. And over the long term, VFC does have potential to hit 45. I don't know if that's going to be in 1 year, 3 years, 5 years. I'm not sure, but definitely I'm expecting this move over the long term. Almost a 2% dividend yield now. Obviously, it was a lot higher, the yield, when it was $11, but yeah, I mean, tiny position for me. I have 145 shares, and if earnings are good and my shares get called away because I do have a covered call on it, then I'm left with like 45 shares in my Robinhood. So it is what it is, though. I can't be too mad about a profit, especially if it's on margin. If you make profit on margin, you should just be grateful, like in general. But if you are not using margin, I don't think trading is worth it, just because like you're making small wins here and there, but it's much easier to just hold for the long term because you don't have margin anyway, right? So why risk underperforming the market when you could just buy and hold and possibly outperform the market? It's just my 2 cents. But anyways, Meta is actually one I am highly interested in buying. So you look at the daily, a similar situation we had going on here to VFC, where we had that big spike right here, bull trap, right? And it got rid of those short-term buyers. And now another move down. It looks like it wants to come back up for another second chance, right? A second try. Looks like a 12% if it hits this other zone. So, and it's also Meta at the end of the day. That's reporting on Wednesday, the 28th. So I am considering making a trade on that. And by the way, this from now on earnings, anytime I make a trade, I'm going to try to get it on like a recording for you guys, whether it's on my Robinhood tab or like this. And then I just place a trade like right here or something, and you guys can see it. Eventually, when my videos start getting better, my format gets a lot better and my videos get more traction, I do want to do like live trading. So like we'll have earnings pulled up, right, real-time information, and then you'll see like in real time me placing a trade, waiting for that earnings pump or whatever, or like some short-term options if I do that. So that is a goal of mine. But as of right now with like these videos, obviously I don't have like 1,000 subscribers, so doing like more long-term stuff, just like more general videos like these, I guess is a lot better for right now. But I did make a trade on Netflix, even though that didn't work in my favor. I still placed that trade in my actual video. So I do like that kind of stuff. Microsoft, I'm not gonna lie to you guys, it does not look pretty. It was consolidating for a long time, double top, broke down, now it's coming back up to retest. It broke the 200-day moving average as well, so it's not looking too good. And we also have a gap down here. Let me mark this gap down here. Yeah, so technically it does not look pretty, but also fundamentally Google has been outpacing OpenAI right? It's been growing faster than OpenAI, and it's eating up a lot of market share. And I believe Microsoft is an investor, or they at least benefit somewhat from OpenAI. So if OpenAI is losing market share, that could maybe be a negative for Microsoft, like fundamentally. But obviously, technically, it's been playing out in the numbers, right? In the stock price. You got that double top, broke down 200-day moving average, and now it's trying to come up for this resistance right here. But it possibly, for anybody that does have some Microsoft, could possibly have a 15% drop. But who knows? It could have a pump on earnings. So very nice chart on StarBucks. It broke that 200-day. It finally broke that 200-day. When it comes to StarBucks, it's a 2.5% dividend. Could it pump on earnings? Possibly. It's been, every time it's been reporting earnings, it's just been dumping. Okay, so the last time it went up on earnings was last January. So literally 1 year ago was the last time it went up on earnings. So, it might go up this time. It might go up this time. I want to see, how do I color code? Yeah. Okay. I'm not sure what that does. I've been using TradingView for so many years, but I've never color coded like that. But yeah, I'm gonna put green flags on the ones that I could possibly trade on earnings, as well as Levi's. Yeah, Levi's could have a surprise pump, right? Similar situation to a VFC. I've been saying for a long time now. You guys can check all of my old videos for the receipts. I've been saying for a long time, clothing stocks are gonna make a comeback, or they have been, I should say. They have been making a comeback, right? The Kohl's short squeeze, the American Eagle short squeeze. What else? Lulu seems to be coming back a little bit. Nike has not played along yet, but it possibly could. We have the insider buying in Nike, right? The chart for VFC has been looking good. So, yeah, Levi's also looks good on the chart. As you guys can see, it's been consolidating here. I don't know. I guess this is the box. It doesn't really matter, to be honest. The fundamentals, technicals, sometimes they're right, sometimes they're wrong, so it doesn't really matter. But we could see a pump here to this zone and then have it come back down, right? So we could see a pump up here, then come back down, that type of a movement. So 12% pump, 2.5% dividend. So definitely gonna be eyeing that one. Amazon I also like, just because it's Amazon, right? And also Apple. I don't have any Apple stock, so I could possibly make a move on that. I don't know if I'm gonna make a move in my Robinhood though. I like having my Robinhood portfolio be hyper concentrated in Robinhood. I just think that's funny. So yeah, I usually, when I make a decision, it's mostly because it's funny. Right? It's just an entertaining decision for me. Right? Sometimes it's a financially smart decision, but most of the time I just make a play because it's funny. I'm probably not the best person to listen to, but that's just my honest take. So Amazon. Okay. So Amazon looks a little bit better than a Microsoft. I do have a crazy amount of lines just from trading it over the years. Okay, hold on a second. I did not want to delete my indicator. So hold on a second. Do not delete my indicator. Sorry everyone, this is very unprofessional, but we have this big drop right here. Hold on a second. Let's put the calculations up. All right, so 30% drop, very decent drop to wipe out whoever was leveraged. And then it had that, yeah, 57% pump. Let's get rid of that. And then it has this nice box right here, broke out, came back in a retest. So it's like a tighter, so it consolidated a little bit right here, made that swing up. Consolidation is a little bit tighter here. So there's like a little bit more concentrated buying here, right? If that makes any sense. You can really see, oh, that's not what I wanted. You can really see like the tightness right here, right? So here is a lot more loose, but now it's getting tighter. It broke out, now it's retesting. So I like that. I like that view. Pause. Go down to the daily, 4 hourly. Yeah. I'm liking what I'm seeing right here. And if it breaks all-time highs, what would that be? Yeah, 8%. So possibly can make a move on that. Let's look at Apple now. Okay, so Apple. Get rid of all this. Apple retesting that right there. All right, had this nice consolidation here. It's coming up, coming back down to retest. This right here. All right, maybe you could move it up here if you wanted to, but came back down here to retest that. Very oversold on the daily. So earnings, it's either going to be even more oversold, right? So similar to a Netflix situation where it's oversold, but it could drop like a scary amount on earnings just to freak people out even more and get even more oversold, but then immediately like get bought right back up, right? So it could drop down and then make like a 9% pump just because it's so oversold, right? So it will wipe out the people that were long just for earnings, but then all of that volatility, that how oversold it is, people shorting it, they'll just take profit. People will buy the dip, and it's already so oversold, it would just get bought right back up. So it could make a Netflix move, or it could just go up. And maybe 12%, 10%. Yeah, or an 8%, like it'll just copy Amazon, right? You make an 8% move. So who knows? Eastman. And this is a chemical company. It broke the 200 monthly. That's not good. So right here, break of structure, right? That's another thing that I like about this indicator. It shows you when it's like a break of structure. So this is what it's talking about. Consolidation, it broke up, retested, bounced, and now it's bouncing again. So Thursday, the 29th, you could possibly tag 80. Yeah. And that's basically a 5% dividend. So not bad, not bad. Oh man, there's just too much to buy, honestly. There's just too much to buy. Most of them are probably going to go down. You know what I mean? The NASDAQ, just an absolute beautiful, absolute beautiful company right here. Look at that. It's just like a very simple chart to look at, you know? Had this zone right here, fake breakdown, came right back up, retest. Now it looks like it's consolidating again right here. So but I don't think I'm going to make an earnings play on this. Now, just because it's probably going to have a breakout and a move higher, just because I said I'm not going to make a move on it, right? So now that I've said I'm not going to make a move on it, it's probably going to have a 5% pump on earnings, just for no reason. ExxonMobil, man, look at that. Look at that move from Venezuela. 15% move on a 3% dividend yield stock. That's great. That's good stuff. But I don't think I'm going to make a move on ExxonMobil. Could be wrong, though. American Express, I want more of. I want American Express to be my number 2 position in my Robinhood account. But after seeing COF, I don't know. Not as like the company. I'm still bullish on the company, but in terms of a short-term move, it could still copy COF. But, I mean, just because it's American Express, I have to give it the green flag to consider it at least. Okay, SOFI. Nice little wedge here. And it's going to report on Friday. That's going to be an interesting Friday. So, SOFI can either tag 20% or it could come down here like a 15% correction down to the 200, all right, which is the yellow line. So SOFI is like a 50-50, to be honest. Royal Caribbean. Nice, nice. Honestly, I don't know with Royal Caribbean. But this company, I mean, it could swing 15% either way. Let me look at past earnings. So, I mean, it went up on this earnings. Went down on this earnings. It got bought right back up, though. So, went down on earnings to wipe out anybody that was only playing it for earnings. And then came right back up. But this earnings, it did come down. And it came right back up, but it could come down and come right back up. So it'll make like a, you know, tag the zone here, 12%, and then it come right back up here. So never know. Possibly can make a move on Royal Caribbean, Visa. Huge box here. Yeah, so it could just come back up here as like a 13% move, maybe over the long term. I don't know. I don't have any Visa in my Robinhood account. I would love Visa, but yeah, I'll consider it. I will consider that. Now, it looks like it really wants to make this move right here. So I will consider that one as well. Disney, though. Look at Disney. It's been consolidating for a very long time. Accumulation, moving averages are converging. It's getting tighter and tighter. Pause. 200 daily, it's now consolidating above that 200. And it's getting tighter and tighter, wiping out sellers, coming right back up, or wiping out the buyers, wiping out the sellers. So definitely, but it could also come down here to fill this gap. You know, it could come back down to 93. But I possibly could sell cash secure put on Disney. Depends on how my trades go. Depends on how much capital I have. But definitely. I might sell a cash secured put on Disney and then let my covered call on Palantir get sold off at the 100 strike. That is probably something that I'm going to do. But Meta does look really good. Even if Meta goes down, say it goes down to 550. I mean, 60% drop, but yeah, I might buy like 10 shares just to trade it. But anyways, um, I saw this funny post on X. This is from Autism Capital that says that feeling when you are completely right about hyperinflation, Weimar Germany, the breakdown of civilization, the loss of U.S. hegemony, the collapse of the dollar, the rise of alternative assets, but money went to boomers who hold gold and silver instead of Bitcoin. So I just thought that was a hilarious post by Autism Capital. And I know this is how a lot of y'all feeling right now. And it's I've never really been super bullish on Bitcoin. Now I have some Ethereum. I have some Solana. But the reason why I don't like Bitcoin is because when you think about it logically, do you think people are more likely going to go to something that is like gold and is digital, yes, but they can't hold it in their hand? Like, they don't really understand what it is. They might pretend like they know what it is, but they don't actually understand what it is. Like, only people that are actually in the industry truly understand it at a fundamental level. You know what I mean? Or do you think they're more likely people, just mass people in general, not just boomers? Do you actually think they're going to buy Bitcoin, or do you think they're going to buy something that they can hold in their hand physically, like gold? And that's just kind of like the mentality that I've had for a long time when it comes to stuff like Bitcoin. I just always thought that gold and silver, even though the price was not performing as good as gold and silver, or as Bitcoin, I should say, at least during like that 2020, 2021, and then 2022, 2023, obviously gold and silver were not like Bitcoin and crypto. Crypto was just so much more exciting, but I've always just kept that mindset of like, it's just common sense, you know? Like, are people going to buy something that they can actually own in their hand and, you know, feel like it's theirs, or own something digital like gold, right? Let me get in the camera view. Have it in some digital wallet that they could possibly lose. And, you know, it's, when it comes to crypto in the short term, I do think it could go up just because of how oversold it is. If we look at the chart, let's just go to my portfolio. Like, just in the short term, like, crypto is very oversold right now. Ethereum came back down to this middle line right here, this middle zone. So it could have a short-term pump, but when it comes to like Mr. Hardware Media, this says hold tight, biblical rotation from precious metals to crypto incoming. I mean, I basically have the same reaction as Autism Capital. It's just hopium. And even though it could happen, right, in the short term, gold and silver could cool off while Bitcoin has a pump. But I think over the long term, it's just easier for people to understand gold and silver rather than crypto. And crypto will obviously have a lot of volatility, but I still think it's hard. It's easier for people to grasp Ethereum and Solana because they actually pay a yield, right? Staking yield. So I think it's a little bit easier for people to grasp, or easier for people to justify buying it than a Bitcoin. But yeah, we'll just have to see over the long term. But yeah, I mean, I just wanted to share this post because I see a lot of Autism Capital's jokes pop up on my feed. I just think they're funny, so I like sharing the accounts of people that I think have interesting content, even though I don't know them. But anyways, in other news, we have Robinhood that finally are paying interest on the cash that you have in your account that is option premiums, so or options collateral. So yeah, for the longest, anytime you had cash put aside for option collateral, like let's say you sell a cash put, that money would no longer be earning interest, but now it does earn interest. So I think this is very good news for Robinhood. I know a lot of people were switching off just because of the opportunity cost, right? Like people that have a ton of capital. Think about 3% on $1 million, right? 3.25% on $1 million of cash is around 32,500, right? $32,500. That is a huge opportunity cost for people that used to have their money on Robinhood, but then they switched off to other brokerages to earn that amount. So now as people's accounts are growing bigger and bigger, they're not as incentivized to get off of Robinhood. So I think this is very good. I also think this will help out a little bit. I don't know how much impact it will have on numbers, but it could possibly boost a little bit of their interest income. So that cash sweep that gets put into banks, and then banks pay Robinhood a small slice of that. So that might grow a little bit, but I mean, it's probably going to be a minuscule amount. But anyways, in the long term, I do think this is a good thing for Robinhood. So it's what I like to see. I still think Robinhood should look into tax lots for covered call collateral. So let's say I have 100 shares of Nike that I want to sell a covered call on. I get to select the tax lots that are most beneficial for me to put into that trade as collateral. I think that's something that Robinhood should look into as well. But as long as Robinhood constantly makes small improvements here and there over the long term, I think they do have the potential to be to be in the $1 trillion boys club. But here we have an overview of next week's, or basically this week's, earnings. We have Ryanair. I know they've been getting into a little bit of back and forth with Elon on Twitter, but we do have a bunch of banks reporting as well. A lot of companies that I just don't really follow. Let's see. Yeah, Monday, I honestly don't think I'm going to really care about anything. Tuesday, United Health is interesting. That is one that I forgot to put on my watch list, along with Seagate. I know they've been doing pretty good. Yeah, I should probably put Seagate on there. I should probably follow Seagate. What was that other one? UNH. UNH has been being down a lot, so I don't know if it's going to have a big pump on earnings. I know, what's that other stock? SanDisk. Yeah, so I don't know if UNH is going to have a big pump on earnings, but let's go SanDisk. SNDK. I think they had earnings recently, right? Or they're about to. Okay. On the 29th. Okay, so it would... I thought I was going to... I thought SanDisk had already reported, and that was the reason why it went up a lot. So I was going to make a play on Seagate, but honestly, I might just make a play on Seagate. And if Seagate does very well, I think that will also have a positive effect on SanDisk possibly. But I'm liking the structure right here, right? Consolidated breakout, another consolidated breakout. I'm liking that structure. Yeah, so I mean, look at this beauty. Break a structure, break a structure, break a structure, break a structure. It's just beautiful line up following that 50 daily moving average. But at the same time, if I do make a trade on this and this ends up being the big one and it ends up dropping to that 200, that's pretty scary, not gonna lie. Yeah, a 40% drop on earnings, that would be scary. But I'm still gonna follow it. Let's see, UPS, that's interesting. RTX is interesting. American Airlines, I guess it's interesting. Corning is interesting. More defense contractors, Starbucks, obviously, VFC, Progressive for insurance. And then we got big tech, semis, ServiceNow, IBM, waste management. Yeah, obviously more big tech. Lots of interesting. Altria. Honestly, Altria might have a pump just because I think a lot of people are looking for yield right now. Yeah, it looks like it's had a pump already. 54 to 61. Altria might have a pump on earnings. But I also don't know. I don't know anything. Yep, Eastman we already covered. More clothing brands, I believe. Deckers. And then obviously we got SoFi, American Express, Verizon on Friday. We got Chevron, ExxonMobil, Lyndon Bassel, Air Products, APD. How have they been doing? I'm just kind of curious. If you guys haven't yet already noticed, I'm just kind of going off now. But we are still going to react to a YouTuber that a lot of you guys like. APD, how have they been doing? Okay, so still sideways. Honestly, APD could definitely make a move on earnings just because of all this consolidation. I mean, any stock can make a move on earnings, you know what I mean? Last earnings, they did go up. Y'all have to keep that in mind. I'll have to keep this in mind. APD. Okay. Well, now let's react to Mr. Financial Education Jeremy. I know a lot of you guys watch him, one of the most popular financial YouTubers there. Obviously, well, it seems like he is also a shameless advertiser of Nike. He's got the new Nike slides along with some Jordan socks, it looks like. So, fellow member of the shameless walking advertisement for Nike gang. I'll just go ahead and like the video. But anyways, I wanted to react to this specific portion of his video.
So, on a stock, this is one that's a $2 chuck. Very, no one pays attention to it. Probably me, actually, right? I'm gonna be the only human.
I pay attention to it.
On a stock. It's interesting in regards to Honest because I've been noticing a trend kind of take off recently, and maybe it's because social media started to take off or whatever. But flushable wipes have become a much bigger thing very recently. When I say very recently, I'm talking in the past few months. I don't know if it's like a social media trend or what's going on, right? And you think about wipes. Usually, you think about like you have a baby and you use wipes, but these flushable wipes have been kind of taken off, and Honest has been one of the leaders in regards to these flushable wipes, right? And the reviews for these flushable wipes have been tremendous, and a lot of them have been very recent, like this review December 18th, December 29th, December 20th. A lot of them have been very recent, and so it's interesting. My wife actually is the one that first bought these flushable wipes, right? And I gotta say, I started using them, and they make you feel very clean. That's all I'll say about that. Very clean. And like when I went on my trip, we had to use regular toilet paper. Dude, after you get used to the flushable wipes, you feel like the dirtiest mofo on the face of the earth when you start using regular toilet paper again. So I highly suggest anybody watching this video, don't start using these flushable wipes because you won't be able to just use toilet paper after that because you're going to feel dirty. Very, very dirty, okay? It's never going to be the same for you, okay? But the moral of the story is once you start using these, honestly, you can't go back to toilet paper. It's like, what? Toilet paper? Wait, toilet paper? Oh my gosh, what happened to us, right?
So when it comes to what he said about these flushable wipes from Honest, right? Now, I know what you guys are thinking. Me, like mostly financial YouTuber, right? Reacting to another financial YouTuber. Probably going to talk about financial stuff, but I wanted to react to this specific portion of the video because I do have a video from a very long time ago talking about honest wipes for adults, and about how I actually personally use honest wipes. And I'm not afraid to say it. I'm not gonna lie to y'all. I'm not afraid to say it because, for the most part, I don't really care about what people think. I just do what I think is like the best decision. But I do have an old video. You guys can go take a look about how I use these honest wipes, and how I think they're so much better than toilet paper. But what did I want to talk about? So this whole flushable wipes thing, I think it's mostly just a marketing thing. But it is true that the underlying trend is more towards like using wet wipes and less on toilet paper. I think eventually, like over the long run, I would say toilet paper is like a declining business. I haven't looked at numbers, but just me thinking and me just thinking out loud, I think toilet papers is like a declining business, and wet wipes I think will be a growing business, even if population continues to stagnate and people have less kids. I still think this business will be growing, and Dude Wipes is a perfect example of that, right? A quote unquote flushable wet wipe brand that markets to men. But I personally don't use Dude Wipes because I think honest wipes are much higher quality, and it makes sense because they're for babies, right? I think like Dude Wipes, for the most part, dudes don't care, which is why I think they don't really. It's still high quality, but I don't. If you use honest wipes and then you use Dude Wipes, you'll know what I'm talking about. It's hard for me to describe. The honest wipes are thicker, they're wider, and it's almost like they're made for moms, right? Because moms are probably using them every single day for babies. And you can really tell that with the attention to detail to honest wipes. But for the most part, I think this whole flushable wipes thing is just marketing, because Honest knows that like baby wipes, most adults are not going to use it because they don't want to be made fun of, right? Obviously, I don't care. Y'all can make fun of me. But I think other adults, most adults, are kind of iffy about it because they don't want to be called a baby, whatever. But yeah, they basically put baby wipes, put it into packaging that says flushable wipes so that adults will buy it. But I have seen some YouTube videos that kind of expose flushable wipes, saying that they're not actually flushable. So I always just throw them away because I don't want to clog up my sewage and call a plumber and do all that mess. I don't want to break any pipes, whatever. So it's not purely environmental. Yeah, I do pay attention to that, but it's mostly because I don't want to bust any pipes or get clogged up sewage, and just back up my toilet, right? So I always just throw them away. But yeah, basically, I wanted to talk about something that is not financial related, which is not what you guys were expecting, I bet. Me, you guys know, talking about finance all the time, reacting to another financial YouTuber. You thought we were going to talk about finance, but I tricked y'all. We're talking about Honest instead. But yeah, I highly recommend, not the stock, because I don't give financial recommendations. I do recommend, though, that you guys buy Honest baby wipes and actually try to use them, like after you go use the restroom. But don't flush them, throw them away, and your life will change. But yeah, that's basically it. I know it was kind of a boring video, mostly because I am a boring person. But I just went over some more charts to help you guys out with like chart reading. I went over some earnings upcoming. I went over a little bit of my portfolio, not too much, but it's getting closer to 50 minutes. I don't want to push it too far because most of you guys don't even watch these. All y'all will watch the short videos or like the videos of my iPhone recording, but none of you guys watch like these long-term stuff where I actually go into detail on the charts, which is interesting. But anyways, let me know if any of you guys are actually watching this by commenting. That's not because I actually want more comments. It's mostly because I genuinely want to know if anybody's even watching these. But I'm still going to pump these out. Still going to be reacting to videos. Still going to be going over charts and fundamentals. But yeah, that's about it. 50 minutes for you guys.